Hello and welcome. Thank you for coming to today's Atticus Advantage webinar on the emergency relief loans. My name is Mike. I am the back-end moderator, and I'll be handling any questions that you may have that you chat in your chat box. Today's moderator is our founder and president, Mark Powers. Mark, I'm going to go ahead and let you get started because there's a lot of material to cover. Thank you very much.
Thanks, Mike. So hello, everyone, and hopefully you can see me and some of the other panelists on the call. I'll introduce everyone. So this call is really to go through the emergency relief loan packages, and I'll go through the intentions in a moment, but we really want to look at what do we know, what don't we know, and how do we decide if a package is right for us. So there'll be lots of questions and answers. It's going to be very interactive. So you can use the chat function you'll see over in the control panel. And Mike can take the questions and then he'll repeat those or speak them out to us. Or you can hit the hand icon and it'll raise your hand and that'll allow you to be unmuted by Mike. And you can be heard by everyone else. So there are many of you on this call that may not be part of Atticus or know Atticus. Let me say something about it. My name is Mark Powers. I'm the president of the company. And we were founded in 1989, so 30 years ago, over 30 years ago now. And we support, that's all we support is law firms. So we work for law firms to make sure they can run a business that truly serves their life, can increase their revenues, can get them better satisfaction with their practices, and allow them more personal time with their family and their personal interests. So really it's about giving them back their life, but running a business that does that and understanding how to do it and grow it. So on our call, well, I'll go through the introduction in a second, just the intentions. So we want to clear up some of the mysteries around the emergency relief options, make sure you know what's available to you, how you can assist your firm and your team, because we're going to talk about your team as well. We're going to give you a first-hand perspective from a law firm applying for the government relief packages, and then we're going to answer any of the questions that you might have. So I want to introduce our panelists, who you should be able to see in the videos. There's one that's not here, and I'll introduce him as well. So first, Philip Richardson and Joe Siegel. They're both phenomenal entrepreneurs and lawyers and owners of law firms. You'll see as they talk that they probably have between 7 and 10 businesses that they're working on at any given time. And Charles Bell, who you see on probably on the video and also the picture on the screen, is their COO, and he runs operations for the various businesses. They are really great entrepreneurial attorneys. They're gone through this process, working through the process, done a lot of research on it. They've been on calls with various financial institutions. They've been on calls with the Small Business Administration. So they've had some good stuff to go through in this process. They're also in the Dominate Your Market program. They're coached by a great coach, Cammie Hauser. So welcome, Richard, Joe, Charles. Welcome, everyone. You guys there?
Hey, yes.
Hey, all. And also on the call with us is Aaron Rothert, who is a practice advisor with Atticus. And he's done a lot of research on this subject as well, as Aaron used to work in the IRS, which is, he calls not the happiest place on the planet. So the other thing, welcome, Aaron. Can you hear us okay?
I definitely can. Thank you.
Okay. So I want to go through, you'll see attached to this webinar a few items and handouts. You don't have to grab them right now. We just want to let you know what's there. What's attached is some of the small business guides for getting a emergency relief package, either the Paycheck Protection Program or emergency grant. So it's got the information on it and a lot of things that you'll need to know. Some of you may have been sent this information. Also is attached is the paper copy for the Paycheck Protection Program. Now, most of you are going to do that online and won't need it. There's also a program comparison. So you have an overview for the Paycheck Protection Program. You're going to have one for the Economic Injury Disaster Loan, and then the grant program. And we'll talk about all of these, but just want to know you got this little handy handout that Joe and Philip made available through Advantage Capital and someone they're working with. So the other handout that you have is a handout that you'll use for your employees. This is just to let them know their rights. You may have got this from your CPA already, but this will go, you'll email this to them and post this in your office. So those are the attachments, and we're going to jump into it. So Philip, Joe, jump in, Charles, jump in, Aaron, jump in as you need. I'll just sort of open up with an overview, and then Philip and Joe, you can talk to us a little bit about your experience. So the CARES Act, which was just passed and authorized, stands for the Coronavirus Aid, Relief, and Economic Security Act. And $2 million in the package. I'm not sure where all that, $2 trillion. I'm not sure where all that is going, but $10 billion is allotted for the emergency relief packages and $350 for the Paycheck Protection Program, which we're going to hear is called PPP. They're all administered through the Treasury and the SBA. And when you're applying for them, you're going to apply through a participating lender, meaning someone that's already working with the SBA. And there are four things we're going to look at with this. One is the disaster relief loan, the disaster relief grants. Both of these have been in existence for a while. They're usually used for hurricanes, things like that. They've just been more money has been added and better rates, and I think they've increased from just normal injuries that come along, storm injuries, to economic injuries. So in addition to property, economic injuries have been included. And then we're going to talk about the Paycheck Protection Program, PPP, and then how we can, and by the way, the Paycheck Protection Program is the one that's going to be most important to you on this call. And then we'll talk about the unemployment insurance expansion, which is going to be important to your staff and your team. So, Joe, Philip, you want to say anything as we jump into this?
Well, yeah, we'll go through it, but I think we'll get to the details as we go through it, and we'll explain what our experience has been with both the EIDL and the PPP so far.
Okay, so I'll give the background on it, and then so it's clearer for people. So we said the four elements. The first is the disaster relief loan. So that's up to $2 million per user, 3.75 interest rate. There's no fees. The payments are deferred for 12 months. These loans, now it can get a little confusing because you've got disaster relief loans and the Paycheck Protection Program. These loans may not be forgivable. You have to check on it, but they do have an immediate $10,000 advance. And once you apply, it should be approved in a day and payable to you within 3 days. So, but according to the U.S. Chamber, so there's a $10,000 grant available, so an emergency grant available. There's no obligation to pay this grant, repay this grant. It's not necessary to be approved by one of the other loans. However, if you do get the Paycheck Protection Program loan, the $10,000 grant will be subtracted from that loan, and you apply for it here. So, Philip or Joe, you guys have applied for this. Do you want to talk about it?
Yeah, this was really easy. You just apply straight through the SBA rather than to a bank for the 10,000 emergency grant. I did it for my firm, and Philip did it for his firm, just to see if we could get the $10,000 emergency funds really fast. It's tied to your Social Security number as an owner, as a principal, and you give them your bank account information right there so they can dump it right into your bank account within the 3 days. We've actually gotten mixed messages as to how this is handled. Some people have said that it will bar you from getting the PPP later. Others, we were on a call with a congressman yesterday, and he had an SBA official on the phone call with him, and the SBA official said that the $10,000 grant, or if you go higher, would be rolled into your PPP. So I tend to go with what he said. I think really right now their policy is they just want to get this money out there as fast as possible to keep businesses as liquid as possible so they can retain as many people on payroll and pay as many of their bills as they possibly can. I've been referring a lot of clients to it, a lot of realtors, brokerages. Rent was due yesterday for a lot of people, and for some reason, some of these landlords are just not being flexible at all, and they're threatening to evict. So I've sent a lot of people to this website to say, hey, just apply for the $10,000 emergency grant, at least get that money in. It'll tide you over for this little while until you can get the PPP loan application completed and in through your bank.
And one of the things that the SBA official we heard yesterday, she suggested even if you may not need the money right now, you go ahead and make the application and set the money to the side when you get it, because we're not exactly sure how long this event will last, and you may need it in a few months.
So for everyone listening, you may have questions. As a matter of fact, Mike, if there is a question about, because we're going to spend most of our time talking about the Paycheck Protection Program, which is really applicable to most people. But I think what we're saying here is that this is really a no-brainer for everyone. Go ahead and apply. Now, did you guys have to do the certification on this, Joe or Philip? Because the PPP, the Paycheck Protection Program, does have the certification where you have to say that how you're using it, that sort of thing. Did you have to do it for this one?
You do have to certify. You have to certify that you've been adversely affected by a disaster, and the coronavirus has been deemed to be a disaster. So you're fine to do that. You also have to make some other certifications that you're not behind on child support, and you're not a felon, and you've not been debarred by the SBA from receiving funds. So
all of those certifications are in the online application. So as you're going through, it'll ask the question and you check yes or no.
Yeah. So Aaron or Charles, do you want to say anything about this?
Whether or not anybody on the panel has received their loan yet. Some people have applied and it's past the 72 hours and they haven't received anything yet.
Yeah.
I'm sorry, Mike, say that again.
We've had several questions asking if anyone on the panel, if they may have applied for a loan, if they've received theirs yet, because it's been past the 72 hours since they sent their application in.
We have not.
I don't think we have either. I haven't checked the bank account today, but I don't think so.
So, Philip, this is probably a good time to talk about that. I couldn't find the clip for the money grab. But here's the thing. We're going to talk about the PPP in a little bit. There's a certain amount of money available. I think it's like 362 billion, but it's a first come, first serve. And we'll talk about when you start applying, which is tomorrow. But everybody and their brother are going to be applying for these things, and you should be one of them. I can only imagine they're going to get backlogged on these very quickly, if they're not already. Aaron, is there anything, or Charles, is there anything you want to say about this?
Charles, you're muted.
Mike, Charles has to be unmuted.
No, he's still muted.
He's still muted, Mike. Aaron, in the meantime.
Charles has, his icon says he's self-muted now.
Okay.
There he is.
Well, I clicked on the mute button to try to unmute myself, but apparently I was out of control. No, I have more really to say on the PPP program, not so much on this particular grant.
Okay, good. And Aaron, anything else on the grant? And you are muted as well.
Okay, I think we've covered the grant to the extent of the information that we've got. I think there's still some uncertainties about how the grant's going to be handled once it's actually distributed, but I think the advice is solid. Apply. It's a money grab situation right now.
Yeah. So everyone on this call should be applying for this. There's a link to apply right there. The worst case scenario is you're going to get turned down. So I'm going to move the conversation and talk about the Paycheck Protection Program. So you'll just hear us saying this will be the PPP. So again, there's a couple of things. There's emergency disaster loans that will cover property and economic damage. Those are big loans. There's a little unclarity about who and why anyone's applying for those, but a subset of that is are the grants, the $10,000 grants. That's also part of the emergency package loan. You can apply for that, should apply for that. In addition, the CARE Act provides for the Paycheck Protection Program. So it's designed for small businesses, which you are one of them, and it's assuming you have fewer than 500 employees. There's $448 billion allocated for it, and it is first come, first serve for this. Applications start tomorrow, April 3rd. If you're a independent, self-employed, it starts, I think, April 10th. So you really want to get moving on this. I think, Joe, Philip, you already have your application. You've got, Charles has already worked on and completed your application. Is that correct?
Yeah. Yes.
So you guys already talk about what you went through in your process.
Well,
Charles, you can explain it better than we can.
Okay, so we did apply. And Joe is right. I can probably explain it a little better only because, look, you have to go through your local bank or whoever you have a banking relationship with. There's 1,800 lenders that are out there. We do have a smaller regional bank that we work with. They found out about this along with everybody else on Friday as far as the details, and they have not been able to clarify a lot of the questions we've had out there. One, for instance, is when we went to apply, there was a portal that they were going to have us involved in, and then there wasn't a portal. So they said, well, we have an online application, or excuse me, a fill-in PDF that you can use. You fill it in the PDF, put it in, lo and behold, today, they have more information on their portal. They are now redirecting us out to the portal. So in the end, the SBA does administer the applications and they administer all of the documentation, but your lender is the originator. And so your lender is sitting in the middle of what the SBA is dictating, what their credit committee is requiring, and what the SBA needs in order to process your information. So I spent the morning this morning working with our banker with a number of questions that are still yet to be clarified. But in the end, the amount of information that is needed on the application is very simple. There's only about 15 or 20 questions. There's only a few that are financial in nature. Many of them are more of the adaptation questions that are out there, and questions regarding your affiliated businesses. But the simplicity of the program, and on the application is this. There are a number of ways to determine what your payroll is, but once you come up with what your monthly payroll is, and all payroll related expenses, it's not just payroll, it's wages, overtime, 401k, anything that's kind of related to payroll and health benefits. Once you come up with that calculation, you multiply it times 2.5. That is your loan number. So for simple math, if your average all-in payroll number is 100,000, you multiply it times 2.5, you now qualify for a $250,000 loan. That loan to the Paycheck Protection Program would be approved. Don't know how long it takes to get it approved or in our hands because we're in the middle of it right now. And I'll stop there.
Yeah, I like that. Mike, can you do the mute again? I like that, Charles, in the sense that what you're saying is they've been working on it. I'm sorry, Mike, you got that muted. So they've been working on it a little while to get ready to do the loan so they can put it in tomorrow, but they're already working with the banker. Charles has already worked through the process. And what I think Charles is referring to, and Joe and Philip, if you want to speak to that at all, it's not a day-by-day thing that you're getting updated information. It's hour by hour that you're getting updated information with this. Did you want to say anything about that, you guys?
You're correct. We're getting information from our bank, hour by hour, and the information is also coming in from SBA and other sources. And we're just trying to digest it and act on it as quickly as possible.
Yeah, because it is first come, first serve. I'm sorry, were you going to say something?
Well, I was going to say so if you do Google SBA participating lender, that will take you to a tool to find the participating lenders in your state. And you basically just pick from one of those lenders and reach out to them to make the application through the lender.
Who have you guys been working with, Philip? And is it a good experience with the bank?
We have a banking relationship with City National Bank of Florida. They are a participating lender. They actually reached out to us last Friday, before the program, as the program was being passed, the $2 trillion bill was being passed, to let us know this was an option for us.
So, I think I talked to Philip and Joe earlier about this, and we're going to give you some more details on this Paycheck Protection Program. But one of the things that we were talking about is this is like the Wild West gold rush, in that the government really is trying to get as much money out into the economy as they can to bolster the economy. And at the same time, they're trying to help employees and to make sure they're protected, but also protect the small business owner, at least blunt the damages they can. But it is like the Wild Wild West and the gold rush. And Philip, you were saying it's like that. There's an episode in Golden Girls where you described it, and tell me if I got this right, where they're put into this tube and they're playing a game where they have to catch as much money as they can in that process. And so it is a little bit like that. And you're going to have to get started right away on this to benefit. It will cover up to 8 weeks of your payroll cost, including benefits. And it can be fully forgiven if used for the following things. It's got to be used for payroll costs, but that does include your 401 costs, your taxes, your all of the costs that go along with that. But it's only for salaries or incomes up to 100,000. I'm assuming, and I don't know if Joe, Philip, or anyone else has more information, that if I had an employee $150,000, it would cover 100,000 of that, but not the other 50,000. Would you agree?
We haven't received any guidance on that. We think that we would pay the 100,000 person out of the account up to the max that's allowed there, and then if needed, we could pull from our other regular account and pay them the balance of their salary out of the regular account.
Operating
Operating account.
firm operating.
Firm operating account.
Yeah, so there's a couple of things. It is for payroll protection. It does cover interest on mortgage. It does cover rent payments, utilities, and it will cover the period. So you can submit the period February 15th to June 30th. So those are the periods it's covering, but 8 weeks. And at least 75% of the forgiven amount must have been used for payroll. So this is, if you qualify, this is almost a given that it will be forgiven, but 75% of it will be for, has to be for payroll. Now, some of you are going to be in a situation that you definitely have to lay off people, and this will give you a chance to keep them. And we'll be talking about what if I do lay them off, how do I deal with that? But this will give you a chance to keep them. This could also apply. Listen, I've got cash. It's not, I've got some cash, but given the downsizing of my firm, I probably would have to lay people off. So you can still qualify, and it still applies to you because you would have laid people off just to control expenses. Matter of fact, Atticus's coaching to you has been to start prioritizing your talent. And as revenue starts to drop, is that you're going to have to let some people go. This will give you the opportunity not to let all of your talent go. Joe, Philip, Aaron, anybody want to say anything about that?
Well, we're using it as an opportunity to, we want to try to hold on to as many people as we have, because we know we're going to get past this. We know we're going to persist, and it will end, and it will come back at some point. So you try to hang on to as many employees as you can, especially considering all the training and effort you put into them to get them where they are today. So as soon as our banker called us, Brian called us last Friday. Well, first of all, he sent me an email. He sent me a text. He called my cell phone and he left an urgent voicemail. He called my office phone, left an urgent voicemail. So I figured, okay, well, I may need to call Brian back. As soon as he told me, hey, this is to do this, and as long as you keep the employees from February, the same ones that you had, or the same number that you had on February 15th to June 30th, then it's forgiven and you don't have to worry about it. It's sort of like a light bulb had gone on over us, because we had started that day with, okay, who do we have to keep? Who will we keep? And how many will we have to let go on Monday? I mean, it had gotten to that point already because the work had slowed down in real estate. I mean, we're real estate lawyers. Philip, of course, is timeshare, so a lot of his timeshare clients had also just called and said, stop everything you're doing. So we started thinking, okay, well, who are we going to have to lay off? So whenever Brian called and gave us that information, it was like this relief, this burden lifted off your shoulders. Oh, okay. And we could understand the policy behind it. The government doesn't want everybody on unemployment. They would much rather people just continue to receive paychecks of their full pay rather than a reduced amount on unemployment to keep the economy going. So even if the employees aren't that busy, they're still going to get a paycheck just to keep the economy going. And
tell me if you guys, Aaron or anyone else has information on this, but if I've already laid someone off, we can recall them and put them back on the payroll, and they'll be part of this.
Mark, we've had lots and lots of questions from the 450 people who are on the webinar. Do you guys, and they're asking them literally as you're talking about different subjects for clarification on things. Do you want to wait until the end? Do you guys want to take any now?
Let me get through I'll go through these because I know there are a lot of questions. So let me get through just a little bit information on the forgiven, and then we'll come back to that.
Okay.
So,
we've been talking a lot about organizations with employees. So I don't know if some of the questions are addressing this, but this program applies to independent contractors, self-employed individuals, sole proprietorships as well. So it's not just if you have employees, it's if you are your employee, your So it applies to all those categories.
And I think Charles has something to add. He'll need to be unmuted.
Mike, will you let Charles know if he's unmuted there?
Who?
Go ahead, Charles.
Okay, thank you. My wife would love to have that button, just so you know. Yeah, so there's no secret to the math. The reason that it's 2.5 times whatever your payroll is, it's the 2 covers your 8 weeks, because if it's an average month, 2 is 2 average months, and then the 0.5 is for additional expenses. But the one thing that we discussed between ourselves is it absolutely helps us meet the short-term working capital need to pay people, but we're not as focused on the forgiveness piece as this loan will help us get through the next 8 to 10 weeks. And we know that a good portion of it, based on what we understand of the qualifications, can be forgiven. But if we have to make changes, then that goes into our saved expenses, and if that doesn't get into the forgiveness piece of the calculation, then that we expect them to offset because of that. That's where I wanted to add.
Okay. Thanks, Charles. So what I'm going to do.
You mentioned. Go ahead, Mark.
What I'm going to do is just go through a few more bullet points real quick, and I'm going to turn it over to you, Aaron, to talk a little bit about how we can help our employees. And then I want to open up to questions as quickly as I can, because we'll come back and reiterate some of this. So the loan payments on the PPP will be deferred for 6 months. It's due in 2 years, if not forgiven, but it will be forgiven, I'm sure. No collateral or personal guarantee is necessary, and you have until June 30th to restore your full-time employee or salary levels at levels that they were. One suggestion, by the way, I just want to check, Joe or Philip, this wasn't your suggestion, was it?
Yeah.
Yes.
So why don't you speak to that?
Yeah. Well, our bank had advised us that you have a good potential of being audited as to how you use the money. So we will open a separate bank account that holds just this money and is only used for the allowed purposes. And that way it's real clean and easy if you get audited.
And it's, again, it's your lender, the participating lender, who is administering the program and will determine, the forgiveness and how you've used the funds. And on the call I had, or webinar I had yesterday with the SBA official, again, she said she had suggested that you keep good records about how you use these funds in order to gain the forgiveness piece. And I asked the question about setting up an individual, a single purpose account for these funds. And she recommended that as a good idea because, again, you isolate the funds and the use of them. And if there is an audit required, you're only looking at that one bank account, not all of your other bank accounts.
I think that's a great suggestion. It's an excellent one. So when you get the loan, you're going to have to certify in good faith that that these loans are necessary to support your ongoing operations. They'll be used to retain workers. You're not going to apply or receive another loan under this program, because you might receive, some of you are pulling credit lines in your business and your personal life anyways, just to have cash available. They just might be a credit line and you might have maxed out to use it. That's different than applying for a loan under this program. So this stuff is all, you'll get this when you apply for it. I don't think this is critical, but let's talk just for a minute and then we'll come back and answer questions, how we can assist your employees that end up being laid off or furloughed. So the reality is that 3.3 million workers have already applied for unemployment. We think that's going to be 4 times, it's 4 times the number of applicants in 1982 when we had the one of the biggest unemployments, and we think we're going to see 10 times the normal number of applicants. Long wait lines. It's taken people a lot longer to apply for things. So they did create the unemployment insurance expansion as part of this. So Aaron, do you want to talk about any of this at all?
So what the federal government has done is really expanded what's available in terms of unemployment to employees who can no longer work. And it's broadly applicable because of the COVID-19 crisis. So it applies to workers who are experiencing that lack of work or temporary lack of work due to coronavirus. And it could be due to their own sickness. It could be due to caring for others. It's also expanded the coverage for 1099 employees. So people, self-employed, gig workers who may not have previously been covered by unemployment are now covered under the new guidance. Additionally, it's expanded the coverage that's available. And so in addition to the regular unemployment that's normally available through your states, the federal government is adding $600 per week to what would be available if someone qualifies for unemployment. They're also expanding the amount of time under which you can claim these benefits. So I think it's all but 8 states give you 26 weeks of unemployment coverage if you qualify under regular terms. The federal government's adding an additional 13 weeks, so potentially someone could qualify for 39 weeks of coverage under the new unemployment guidelines.
And it's administered by the states on this? They go through the states on all of this, right?
It is. So it's federally expanded benefits funded by the federal government, but the benefits are distributed through the states. So it's your current unemployment system, your state's current unemployment system that's distributing the benefits. So what we're seeing is, oh, go ahead.
No, go ahead.
Okay, so some states are adapting to this really quickly. Some are adapting a little more slowly. We're seeing a lot of slowdowns for especially 1099 employees or people who wouldn't traditionally qualify under your state's unemployment system. States are adding new requirements and new processes to allow people to qualify. From the research that I did recently, some states have it in place. Other states, as of the 30th or the 1st, are still saying, please check our websites frequently for the updates. So what we're advising people to do is, if someone's going to go on unemployment, make that unemployment insurance claim, the sooner they can apply, the better. So making that decision and getting in line, getting the application in quickly is really beneficial here. Typically, it's online systems that are allowing us to apply, and these online systems at times get overwhelmed. So if you can access those systems at non-peak times, late at night, early in the morning, when the systems aren't as accessed. I've also seen some states who are setting up regulations and having people apply by letter of their last name. So if you're A through N, you apply on certain days. The rest of the alphabet applies on other days for the online systems. So you'll want to check your state guidelines to see if there are any sort of restrictions there for accessing systems, making phone calls. Some states do allow you to apply by faxing in an application. Some states are really great about processing those. Others I've seen, it's just better to wait for the online system. My advice is try the online system as much as possible. At least there's a record of your application and they can't say that the paperwork was lost. And again, visit the sites frequently, because states are trying to update things as quickly as they can, expanding server access, hiring more people to allow these applications to go through. So, I would visit multiple times a day if you're trying to make the application and your state hasn't updated yet, because that new information is being posted as quickly as the states can adapt to it.
Thank you, Aaron. So listen, it's going to be scary if you have to furlough or put people on unemployment, unemploy them, lay them off. It's scary for them. And then we put this in here so you could talk to them, give them some information. Mike will make these slides available for you. There's another slide that talks about the things they're going to need to apply. And then there's a couple of links for them for they can get resources and how they can figure out what they're going to do with their unemployment, how they're going to take care of their unemployment issues. So there's a lot of stuff here for them. So Mike, I'm going to do this. I think we've covered the 4 things we said we were going to go. And I'm just going to open it up to questions. And I think what I'm going to do for now is go back to one slide and put that up so we can answer questions. And then I'll come down to the ending slides. So
Mark,
Mike, we'll open it up to you.
We have about 118 questions, and we have 11 hands raised. So I'm going to start with some of the folks that have their hands raised. And please know that all of the questions, if we don't get it answered during the broadcast for you, I will be sending the questions to our panelists, and getting and a member of our team will follow up with you if they have an answer for you or not. And this is being recorded as well. I will attempt to capture their answers on a question and answer sheet that I'll get up to our website and let folks know about.
And Mike, I don't know, Joe, Philip, are you able to stay on a little longer after the hour, or Mike, do we have to get on? Do we have to get off this at the hour?
No, we can go on further if we need to.
So if you guys can stay on a little bit, we'll answer a few questions if we have to. Aaron, same for you. Charles, you okay?
Yeah.
Okay, go ahead, Mike.
Okay, I'm going to call on Ed Kanan. Ed, you are unmuted. You can answer. You can ask your question now.
All right, I have 2 quick questions. The first one is, since the EIDL loan, the disaster loan, and the PPP are in conflict, or I guess they have an inverse impact on each other economically, other than urgency, is there really a reason to apply for the EIDL, especially when the PPP application specifically asks you to explain if you've applied for any other loan? And then I have one more question behind it.
Philip or Joe, you want to take that?
Yeah, I would say if you don't need the 10,000, don't bother. I mean, just don't muck the waters. I think the SBA and the government are going to err on the side of allowing you to have more. They'll just roll it in. But yeah, I mean, that's one more no you can mark on the PPP application.
All right, the second question is really one, and the materials that I've seen are all over the waterfront on this, including the ones that were attached here, dealing with the highly compensated employees. So you know the attorneys in most firms. Initially, like in the materials that have been provided, it seems to say the formula is the regular compensated employees, then subtract the highly compensated employees, which would, in a lot of firms, would eliminate the loan entirely. And I think the resolution I've seen from the SBA, or at least that ADP has indicated, is that instead the highly compensated employees are capped at $100,000 for calculation purposes, and everybody seems to be shaking their heads. Yeah. So assuming that's been resolved, I guess the one thing I'll offer is that anybody who uses ADP, there is a one-click form in ADP where they've pre-populated everything that you need to be able to apply in one schedule. If you go on the ADP website and search CARES SBA PPP, it'll pop up one-page form that'll have all of your information from 2019, which should be what you need to apply for the SBA loan.
And that was the ADP? What is, was that the?
If you use ADP for payroll.
Oh, okay. Very good.
And what you do is you go to your run payroll processing application, and in the search bar, just search CARES SBA PPP, and it will bring up a form that's pre-populated with everything from 2019, including taking all highly compensated employees that are over $100,000 and capping that compensation at 100, so it recalculates everything in 2019 that you need for your application.
That's fantastic.
Yeah.
And Ed, what I've seen also is that you can apply for that $10,000 and it will be subtracted from the Paycheck Protection Program. So what I've seen is they're not mutually exclusive. Obviously, you want to talk. No one here is claiming that we're experts. Really, what we're doing, we're really going through the processes that we've seen and we've researched and gone through to try to bring clarity to it.
Thanks so much, Mark.
Well, yeah.
Good. Mike, let's take another question.
Sure. This one's coming in from Herb, and Herb's question is, should and can we include 1099 contractors, such as an SEO company, IT person, outside marketing director, etc.?
In the 1090, I mean, in the Paycheck Protection Program. Philip,
Yeah.
you're laughing about that, and I know Charles, I don't know if you have information.
Well, I'm laughing because we've
Had this
debated that process ourselves, and unless Charles has something else to add, more recent, where we've decided is if the 1099 person is kind of as more like an independent contractor, that's an individual, and we pay them per project or something, we're included them. If it's our IT vendor who's a corporation, then we're not including them and relying on them to go out and get their own, apply for the PPP loan themselves. Charles, if you have something different.
Okay.
Yeah, that's my understanding as well. You're just taking the questions. Herb didn't get to talk on that one. Do you have any more hands raised that we can talk to, Mike?
We do. I am going to call on Christine Lomas. Christine, I'm going to unmute you now.
I'm sorry if I raised my hand, it was an accident.
Okay, thanks. We'll call on somebody else. Thanks. All right, I'm going to call on David Martin. David, if you have a question, you can ask it now.
Hi, guys. Thank you. I wanted to just check two things. One, on the application for the EIDL, which I recall from doing it the other day, that it included a question, do you want the $10,000 grant? And then you could put in your bank info. Are we saying that does not preclude you from filing tomorrow for the PPP? Because you obviously won't know the answer of what you're getting or not getting. That's the first question. Then the second one, I want to see I'm on the same page. I received back a confirmation from SBA with a confirmation number almost 3 days. And is that the same thing you guys got back?
And that's on the grant. You got the $10,000 grant. You got the confirmation.
Yes.
Yes.
Correct.
And
well, I'm not sure which one it's confirming. It doesn't. It actually says economic disaster. I don't think it uses the word grant in the confirm.
Right. They call it a
loan.
They call it a loan, but it's forgivable, so we call it a grant. And we did the same thing. As we've said, we don't think we're not sure, but from what we've heard from the SBA experts and internal folks that we've heard and talked to, it's not going to preclude you from also doing the PPP. If you take the $10,000 grant, it will just be considered that you've already received $10,000. So if you're applying for $250,000, you would only get $240 from the PPP because you've already gotten the 10 immediately.
And the EIDL application, the online application, it does have a question about have you received funds from any other program? And of course, my answer as of the time I completed the application was 0. So it's a dollar amount you fill in. And then there's a area where you can explain. And I basically, just for disclosure, said I'm applying for other programs, but have not received any funds.
Yep. Okay. That's exactly the same thing I did, but I was still unclear even until just now the difference between these two loans. Quite frankly. Thank you.
Well, I will say that the larger. So if you're looking at the screen, the middle column, the SBA Economic Injury Disaster Loan Program, which is it's been around for a long time. They've increased the what's available for it. They've improved the rates, but I will say I don't have a lot of clarity on why we'd be applying for that right now, because I think the PPP on the left, the Paycheck Protection Program, is really designed for us to get it out there now to help us with our employee issues now. We may have much bigger issues than that. And then you're just I think there's some clarification that you'll need. But most of us truly are worried about the economic impact of payroll. And that's what the government's worried about too, keeping people on payroll. So I think that's going to be the most that all of us are focused on right now, other than the $10,000 grant. Other questions, Mike?
Yeah, I'm going to do one that was typed in, then we'll go back to another hand raised. This comes from Robert. Should I reach out to more than one bank or loan service to make it more likely they will get my application in before the money runs out?
I would let Charles answer that one.
Not yet. Is he unmuted, Mike?
Okay, I'm good. So, and by the way, Mike, I'll mute and unmute myself. That way I make sure I don't step on anything. I would reach out to banks that you have a relationship with so that you can determine which one bank you'll make your application. Because I think if you try to apply across multiple, you're gonna run into problems. I will say our experience with our bank, because they're a smaller regional bank, this is a business opportunity for them as well as a loan originator. They've been very proactive about getting with us, even though they may not have all the answers lined up. And so we're getting called back. We're able to ask questions. They're taking it to their credit. So we're getting a lot of good response. We have heard anecdotally that, again, just due to their size and the size of their clients, some of the larger banks may not be as familiar with a loan or trying to find that right person for inside the bank to help you fill out that loan may be more challenging. But once you find out one banker, stick with them, go through the process, and again, I would suggest keeping that really just to the one.
Good, thank you.
So just dovetailing in what Charles said, so the PPP program does provide the participating lender basically an origination fee. So they are incentivized to make as many of these loans as they can, and they're even more incentivized because that origination fee is almost pure profit to them because they have no risk that the loan's going to be default.
So I would probably go with my primary lender if they're SBA approved, and then if they're not, I'd get recommendations or go to the next one or just get it off the website. So
Yeah,
I think
exactly.
we have to, Charles, I don't know if you're muted or not. There you go. Mike, do we have another question?
Yes. Next one's coming from Tom Tona. Tom, I'm going to unmute you now, and you can be heard by the group.
Hey, Tom.
Hi, how are you? So my question is specifically, and I've been talking to people across the country on this, and I don't know if they've given anybody on the call that's moderating it, et cetera, any guidance. Up in New York, trying to calculate, okay, the apex is coming in 2 to 3 weeks. I'm going to put in my PPP loan application at 12:01 midnight tonight, in best case scenario, right? We've already instituted first round of layoffs, like many of us have. And if you calculate the 3 weeks towards the apex, we're definitely being told we're going to be in isolation. Now, my firm is working fully remote with the remainder employees, but we're being told you're going to be kept in isolation mode right now through to the apex. But then common sense says, well, they're not going to tell us the day after the apex you can go out, right? So you're looking at probably another 4 weeks. So I guess my question is it seems more like a Band-Aid. And so let's say the people that we have terminated, to bring them back immediately upon financing, only to re-release them again after the 8 weeks, knowing that they're also expecting a resurgence for New York, let's say around September. Are they giving you any type of guidance as far as if you don't rehire, what is the impact? If you do rehire and then you're forced to do layoffs again, what is the impact aside from the emotional toll on the remaining employees? Has anybody, that has been speaking to government or anything along those lines had any guidance about this 8-week parameter they want you to spend it in, given that it's not very likely that anything, as far as what we're seeing up here anyway, is going to be resolved by 8 weeks?
Yeah. So, Joe, did you raise your hand real quick?
Yeah, Philip and I, we always tell clients when we're giving them any kind of advice, hey, this is the rule right now. This is what we have right now. It could change tomorrow. I heard Secretary Mnuchin yesterday on CNBC on a phone call talking about this program. They are fully expecting that they will blow through the 348 billion quickly, and it will be gone. But they are already planning to go back for a fourth round of stimulus from Congress in a month. And everyone knows that no one has hit the apex yet. New York still has time to go, I think 3 weeks. Florida, we're expected to hit the apex around the first or second week of May in Florida. So yeah, you're right. It's going to all be, this is going to cover 8 weeks, but this is probably going to last longer than 8 weeks. So Congress and Treasury are already working on the next round of funding. So you got to grab the dough now while you can, bring back the people while you can, do what you can while you can, and then hope that in 8 weeks they've funded more money and you've already got your application in, and you just have to do a simple application for an additional advance to keep it going.
That's great advice.
And
I think, go ahead, I'm sorry, Philip.
The way we're looking at it is, you know, whether we haven't let people laid off anyone or furloughed anyone yet, so we don't have to have that conversation right now, but we're deferring that for 8 weeks so we can see what's happening in 8 weeks. And, you know, and for our employees, it means they get more 8 more weeks of a semblance of stability. And like I said, we're deferring that conversation till
8 weeks from now,
till June.
Yeah. So, Tom, I know you're weighing out the benefits. I'm sorry, Charles, did you go off mute?
Yeah. So I don't, by the way, I really feel for you guys up there in New York, and we're here in Florida. And so anyway, I feel for you guys. As you're thinking about it, and I'll just weigh in a little bit, our decision process. You're right, it's a Band-Aid. The 8 weeks is probably going to get burned up, you know, very quickly, and you'll need more. And hopefully there's another program. But how I would look at it is, you know how many employees you had during what's called their covered period. And that's the 8 week period of time that you're going to identify as the week that you want this loan to cover. And that may or may not be at the same level of employees or payroll that you're being measured against back in 2019. And if that's the case, yeah, a portion of your loan will not be forgiven. But I wouldn't let it drive the full decision, because if only 25% is forgiven, or 40% is if 25% is not forgiven, you have a 75% grant. Or if 50% is not forgiven, you have a 50% grant. That remaining balance is not due for another 6 months. It's 10-year terms. There's quite a runway in front of you in order to make plans around that. And if to the degree you have furloughed folks, you are saving that in payroll today. And so if the grant is not forgiven, the savings that you had can be used to pay off that loan as you come across it.
Thanks, Charles. Tom, I know you're weighing out some tough decisions there, and everyone's with you. It's whether to get them on unemployment now so that they don't have to switch or change or anything, or put them on this for a while and then go to unemployment. Sounds like the advice is, if possible, protect the talent you need to and want to, put them on this, and then in 8 weeks, then they have an opportunity for 36 more weeks of benefits. So I know it's a tough decision you're grappling with. We're going to answer a few more questions. Before I do, some of you have to leave, and I just want to give you some final information. I'll go to the final slides just so you know that. There's a couple of things you should know. For those of you that are Atticus members, there is a Coronavirus preparedness hotline every day from 9 to 10. The number will be in these slides. There's an access code to get on. Aaron hosts that, so he's a great coach, very knowledgeable. If you can't make those times, there's something urgent, you can do email grow@atticusadvantage.com, and we'll get someone, a practice advisor, to contact you. Keep yourself informed. If you go to the Atticus Advantage, what do we do, webinars, we've done a lot and keep doing webinars on a regular basis that are specific to either technology, working in a virtual environment, a family law practice, a PI practice, how to deal with cash flow. So those are there and recorded. Next week, we're doing one on the virtual office, remote working environment, and how to do that and how to do it anywhere. Stay connected on the social media, because every time, like Philip or Joe or Charles or a client gives us, somewhere in the Atticus community gives us something of value, we post it so that you guys can share it with each other. So Mike, I'll go back to questions. I just wanted to make sure everybody knew that they had those things available to them.
Okay. The next person I'm going to unmute is Brian Tunn. Brian, you are unmuted now.
Hey, Brian.
Hi, how are you?
Good.
Good. Yeah, I understand that there is a potential offset from the EIDL grant versus the PPP loan. What about the EIDL loan? Would that preclude you from applying for PPP or vice versa?
We think so. I'll answer that. You guys tell me if I'm right or wrong, but we think so. It's like it's one or the other, not the grant, but not the $10,000 grant, but it's one or the other under the disaster relief program. And I would talk to your banker, your lender, and your CPA about which one I would apply for. You guys, everybody, any problem with that?
Okay, and my second question is, in the EIDL loan application, they did ask for cost of goods sold. Now we are, we're a service business, so what type of expenses can be included in cost of goods sold?
Joe, Philip?
I just did a quick and dirty.
Yeah.
I looked at our P&L and it said gross income and then gross expenses. I just put all of our gross expenses as that cost of goods sold, because
Our services are good, and that is what it cost us to produce that service. So
we just took the whole amount.
Okay, thank you very much.
Charles,
Appreciate
no problem with that? Good. Okay, other questions, Mike?
Yes, I'm going to take one that was typed in. Can you count the interest or the full mortgage payment prorated by square footage for a home office? I set up and I'm using it temporarily while I'm staying away from my regular office due to the fact that my wife at home has 4 comorbidities, and I don't want to bring germs home to her.
Great one. Do you guys did that apply to you guys when you did this, Charles?
So I'll answer. Long story short, you'll need to talk to your accountant. But you can absolutely deduct the interest you're paying on a mortgage. I think the easiest calculation would be, you have a building, you have a mortgage on the building that your office is in, and you can deduct that interest as an expense during that 8-week period. You have a nuanced situation where you're at home, you have a home office. I would absolutely ask my accountant about to see if any portion of the interest you're paying could be counted towards that. Yeah, that's my advice.
Good.
Aaron, I think Aaron would probably have a really good answer for that one. It's the IRS.
Yeah, I would definitely talk to the accountant. There's probably going to be some depreciation factors and other things involved, some broader implications if you do end up making that sort of claim, especially once the IRS gets their hands on it and starts evaluating.
Good. Mike, any other questions?
Yes, I am going to call on Amy Shield. Amy, you are unmuted now.
Thank you.
Hey, Amy.
we are a two-person law firm, a PA, where both attorneys are equity owners and there are no other employees of the firm. Are we to apply then on April 10th as self-employed or on April 3rd? And then my second question is, where you fill it out where average monthly payroll is, do you use 4 weeks or the more accurate 4.3 weeks when you're trying to calculate the monthly payroll?
Charles, did you get that question? Did you get that?
You're muted.
Yeah, sorry, I did hear the first part of the question. I think that was in relation to you're an equity owner, and so you may not draw a typical salary.
We don't have the employees. It's just the two attorneys, and we're both equity owners. And I wasn't sure about the dates because you were saying self-employed. We're self-employed, but yet we're not. We're employees of the PA. So I didn't know whether we would file on April 3rd or April 10th. That was my first question.
Just a quick clarification, Amy. You guys take a W-2 then, right? Yes.
Yes.
So that'd be payroll, right?
Yes.
Yeah, it's payroll. Yeah, for sure. I don't think I'm following the April 10th date. So it's
Charles, April 10th, sole proprietors, self-employed, independent contractors, they can start applying on the 10th.
Got it.
Okay, so we would be on the 10th.
No, I think you'd be on the 3rd.
Yes.
Charles, can you mute again? Because yours is it's echoing. I'm sorry. So what they're saying is, no, you do a W-2, so that probably would be April 3rd, Amy.
Okay. The second question that I had, though, was with, I know in Florida, with marital law, they always use 4.3 weeks per month. And when I was looking at this, I didn't know whether we should use our average monthly payroll as 4 weeks, 4 times a month we get weekly, or do we do it at 4.3, which is the way they do it to be more accurate in family law?
And there's a lot of eyebrows going up on that one, Amy.
How do you all fill it out? Did you do it, well, let's say it was $1,000 a month. Did you do it as by 4 weeks? Let's say you got $1,000 a week. Did you multiply it by 4 weeks, or did you multiply it at 4.3, which is the way they do it to be? Because some weeks in the year are 5 weeks, so that's how they average it out.
Yeah, so I'll tell you how we came up with ours. We determined what the average payroll costs for a month. So if you're looking at 2019, you can take your all-in payroll costs divided by 12. That's your average per month, and then that number was multiplied by 2.5.
Okay.
And when you see the application on the portal, or when you're working with your banker, more than likely you'll see the same application I saw. Should. And it made it very, there's one box for payroll, and how you determine that number, and you have to put backup behind that, and then you multiply it times 2.5. That's your loan amount.
Okay.
Thanks, Amy. Hey, Mike, we could probably take one more question because everybody's probably at a run.
Okay. I am going to unmute James Joseph. James, you are now unmuted and can ask your question.
Hey, James. You may be unmuted. You might be self-muted there, James.
Okay, we'll move on to the next person. I'm going to unmute Dana Dean. Dana, you can now ask your question.
Hi, thanks. Thanks so much for this. This has been very helpful. I especially want to thank the commenter about the ADP search. That was very helpful. My question is, unlike the prior caller, I am a sole prop, but I do have employees. And I am very concerned about the idea that I'm going to wait till April 10th, especially since Bloomberg and others are reporting that the funds will all be gone by then. So is there a distinction if you have employees but are a sole prop, or what's your advice in that case? Thank you.
Let me just check on that for a second. Mike, there's a sound in the background. Okay, good. Thanks, Mike. I'm as a sole proprietor, are you still getting a W-2?
Am I getting a W-2? No, I don't get W-2s. I just hold everything as sole prop.
Yeah, I know, but sometimes we can still get you a W-2 inside the company. You can, as an employee, you
No.
can take it. So
I give out W-2s to my employees.
so that's what's covered. I don't know, Joe, Philip, Charles, Aaron, IRS, what do we see here? It's Stump the Chumps.
Yeah.
So only because I'm not as familiar with how that would work, I really don't want to give advice on that. So we don't have that situation. So yeah, I'm sorry, I don't.
I would talk to the bank and talk to the CPA on that, because that's a pretty.
I would talk to the lender you become involved with. Like we said earlier, the SBA is providing the funds, but it's that participating lender that's really burdened with the responsibility of administering this. So they should understand the guidelines and be able to, they're either going to give you the money if you're approved or deny it for whatever reason based on what they're getting from SBA.
At the very least, you can get it applied for your team on the 3rd, this tomorrow. And that's something. And then yours may go 10th. And I think if what Joe said earlier and Philip said that even though we're saying it's first come, first serve is going to run out, they're going to try to put more money in there. And we're pretty sure of that. So hopefully it'll be there by the time you need it. It would really just trying to get to blunt this a little bit wherever we can and blunt the impact of this on your practice. So Mike, with that, I think we're going to go ahead and complete. And I really want to thank Joe and Philip and Charles and Aaron, first off, for making the time, because you guys are trying to work your practice through the crisis. There's plenty of things going on. There's plenty of stress going on. Aaron, you're coaching people every day that are in stress over this. So I really appreciate you making the time for this. And for everyone that's on the call, I think everyone on this call from the panel really empathizes where you are. We're all in it with you. If we can keep focused on getting some cash in, protecting the cash, blunting the impact of this for the next 90 days or so, it's going to make all the difference in the world in how we come out of this. We will be harmed. It's just that we're not going to be as harmed quite as much. So with that, I want to thank you all and good luck. And this will be recorded and Mike will have it posted and a link up on our website pretty quickly. Thank you, everyone. Great job. Joe, Philip.
Mark, I just wanted to add all the questions. Again, if we didn't get to your question, and I apologize, there were dozens and dozens, I'm going to compile them and I'll send them to our panelists, and we will compile a Q&A sheet that we'll post up on our website on the actual replay page for this webinar. It may not be up as soon as the video is, but we will get it up, and I'll send out a notification on our social media.
Okay, thanks, Mike, for doing that. Bye, all.
Thank you. Bye-bye.
Thank you.